If I record this one more time, recorded the first time, my camera died. Recorded the second one, another banger. Forgot to press record on the computer, so I didn't screen record. Third time's a charm. Welcome. Welcome. Back again, once again, time and time again, my friend, until the end. But yeah, you read the title, so I'm doing exactly what the title says, and that is giving you my favorite strategy. And this one is a day trading strategy, keep in mind. Let's take a look at the signal real quick. So this is Great British Pound and Swiss franc, GBP CHF. Hop over to the chart, you can see we're on GBP CHF for this example. Signal was sent out, but we're just going to use this to highlight everything. So first, we need to understand that the daily time frame is the best time frame to trade from. We're still going to keep going with the series. I'm still going to reiterate that fact. So we need to understand, firstly, that the daily time frame is the best time frame to trade off of. Secondly, we need to have an understanding of structure. And simply put, what is structure? Structure is anytime the market goes in the opposite direction. What do I mean? What I mean is, for instance, if we look here, the market is moving to the downside. It goes in the opposite direction. So we have structure down here. Where did the market go from there? The market went up and went in the opposite direction. So we have structure up here. Now I need you to understand that concept going forward. And then thirdly, you need to understand just a little bit of multi-time frame analysis. And that is just understanding what you're seeing as you're moving through the time frames on the charts to equal into the big picture. So we can't get caught up on the smaller time frames, looking too much into it with the big picture. We're just using the small time frames to pinpoint and get a little more accurate. Going forward, how do we move? Well, here's something I came up with, and I bet you can't say it 5 times fast, and that is previous structure yet to be retested can expect to be respected. What do I mean by that? I mean that once we get a break of structure, if it hasn't been retested yet, you can kind of anticipate that the market's going to retest that area at some point fairly quickly. Usually it does it fairly quickly, but overall, just looking at the market in a big picture, the market breaks structure and retests that structure. So if we're going to take that philosophy for the basis of this strategy, I need you to understand that concept, that previous structure yet to be retested can expect to be respected. Now, will it be respected? That's up for the market to decide, but we'll be in a good position if it does want to be respected. So let's look at GBP CHF right here. We're bouncing in between this area. We've not broken this structure, not the high, not the low. But if we do break out either to the upside, we can then anticipate that the market's going to retest this area, and we can look for the retracement back down to it. Previous structure yet to be retested can expect to be respected, and then vice versa to the downside. If the market breaks to the downside, we can look for the retracement, and if the market wants to continue trend, we'll be in a nice position to capitalize on that move as well. Now, people ask me, do you really trade all pairs all the time? And yes, this is exactly how I do it. So I'm either trading the retracement or I'm trading the impulse, and that's for all pairs on the daily time frame. So I have a lot of time to go ahead and set up and find my setups and my trades. But essentially, either I'm trading the retracement back down, which are usually the day trades. They're shorter trades, 24 hours, 48 hours. I don't want to stay in it too long, as well as they are counter trend. So I'm not going to try to hold those positions for long, because the market isn't in that favor of moving in that direction. So I usually are day trading the retracements. Sometimes we are in with the momentum as well, but the majority of the time, the day trades are the retracements, and then we're in a great position to capitalize on the impulse, which are the swing trades, usually 2 to 3 days, sometimes longer, sometimes shorter. But that is essentially it. So it'll break out, we'll day trade the retracement back up to this area, then we'll be in a great position to go ahead and be in for the swing trade back down for the move. So now let's move forward with a little example. Let's see. We get the break below here. So what are we anticipating? We're anticipating that the market's going to come back and retest this area. Why this area here? Because this is previous structure broken. This is the most recent. Yes, once this whole structure gets broken, we would like to see the retracement come back. And where would we like to see the retracement come back to? That's previous, the most recent structure. So this is the most recent move that the market had made. The market went up, rejected from there, went down, and then went back up. And the last time the market went up was right here. So it went down, went up, was right here, and it was support. And then from there, we broke the support. And that was the support that was broken the most recent. So we can expect for that area to be retested. Now, if I play it forward, what do we have? We have have the market that comes right back to that area and retests that area perfectly because it is previous structure support broken to the downside should now act as resistance. Previous structure yet to be retested can expect to be respected. And what does that do? Put you in a nice position to go ahead and capitalize on this move to the downside. So for example, just to go over it once more, price breaks down, you day trade it back up, take your profit at the area that you expect it to. You don't want to hold this longer than what you are actually planning to, even if the market does break this area, and then you are in a nice position to go ahead and capitalize on this move to the downside and start the whole process over again. So what do we have here? If we just want to move this down here, we have where the market came to this area and then went in the opposite direction. So we have structure down here, and then from there the market came exactly where we thought it was going to, previous structure support, now turn resistance, and from there went in the opposite direction. So we have structure here. So now we keep moving along. We understand that on the daily time frame, that's all we're waiting for is price to break out of this structure, and then we want to look for the retracement back down to the area that was broken, either to the upside or to the downside. And then once we do get that, we're looking for the market to come back and retest the most recent structure area that was broken. So if we play it forward, we find some support right here as indicated by this bullish candle and this wick right here. So if we get the break below this structure area, if we do get the break below this structure area, the breakdown below it, we're looking for the market to come into this area because it is the most recent structure level that would be broken. Yes, this is the overall structure that we like to see, but we want to see the market come back to the most recent structure level that was broken. So if we play it forward, we have the market still ranging. Okay, so we get the break and close below the whole structure. So now we can remove this, and we're looking for the market to come back into this area because this is the most recent structure support that was broken and yet to be retested. Previous structure yet to be retested can expect to be respected, and then that sets us up to be in a good position to further capitalize on this market. Now, once we do get that, what do we need to wait for? We need to wait for the big market participants, so the market makers and the hedge funds, to go ahead and indicate that they are ready for the retracement, because we can't force the retracement to come. You can't just buy at the bottom once the market breaks the structure in hopes of the retracement. No, we want to be patient and we want to wait for the perfect time, because trading is all about patience and timing. How do we do that? We wait for a candle of the opposite color. What do I mean by that? I mean, we get this candle here. So now that we have this bullish candle printed, this signifies to me that the big market players are ready for the retracement, the exhaustion, the correction, the pullback, the move back up to this area before they decide to continue the trend, because we know the market moves in waves. It ebbs and flows, ebbs and flows, ebbs and flows. So now that we are ready for the retracement, the market can't move in one direction forever. Now is when we can drop down onto the lower time frames and look for an entry. Now, what do we need to have first before we find an entry? We need the market structure to be on our side. So the same thing that we did to go ahead and find this trade on the daily time frame, to even find this trade set up, we need to do on the lower time frames. This is when I say we need just a little bit of multi-time frame analysis knowledge for this to work for you to understand and actually trade this profitably with your own little things that you throw in there, because I can't give you the full and exact rules that I use in this strategy. I can give you the overall strategy theory and let you go ahead and run from that, because it wouldn't be fair for the people in the program. And if you would like to join the program to get the rules to this strategy and other strategies that I use on a daily basis, go ahead and click the link in the description. It will be the first pinned comment as well. So let's get right back to it. Now that we've dropped down to the hourly time frame, our lower time frames, our entry time frames, what are we looking for? We're looking for the market to go ahead and give us the market structure that we need in order to take a buy, which are higher highs and higher lows. So if we do indicate what this market has been doing recently, we've made a lower low, lower high, 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 lower low, lower high. And now we're starting to make equal highs, higher low, higher high, higher low, and we're on our way making an either higher high, equal high, lower high right now. So we're starting to make this move to the upside. And why do I have this box right here? Because this is the structure level that we need to see broken to the upside before we even get an indication that the market wants to move up from the hour time frame. Like I said, when we're dropping down to the smaller time frames in our multi-time frame analysis, this is used just to pinpoint our entries. So we want to make sure that we have everything satisfied on this time frame as well. We don't want to just hop into the trade blindly just just because the higher time frame says something. So we're still waiting for the market to break above this structure level, because once the market has been creating lower lows and lower highs as long as it stayed below this level. So once it breaks above this level, we can then look for the market with confidence to be making higher highs and higher lows out of this market to go ahead and complete the daily retracement back up to this area. So remember, we still want to see the daily move back up. We just want the hourly to shift from a bearish structure to a bullish structure. So if we play it forward, the market is playing around, attempts to try to break that area, doesn't break, rejects that area, and then we start to see a push and move to the upside. So now keep in mind, we're on the daily time frame. We have been making lower lows and lower highs. Correct. So we don't want to just jump into this trade blindly. Once again, it is a counter trend trade. The overall move is to the downside. You don't want to try to catch a falling dagger, as they would say. So with a move like this or a break above like this, which isn't very strong, we wouldn't be looking for the entry, because the rules that we have, the rules that are in the program for this strategy, we're not satisfied yet. And those rules are there to keep us out of but unlikely trades that are going to play out in our favor. And I do want to say this: if you are patient and you actually wait for something to happen in the market, majority of the time it's going to continue to do what you think it's going to do. But if you don't wait, then obviously it's not going to do what you think it's going to do. It could possibly, but the probabilities are lower. So simply put, what I'm trying to say is, if I wait for the market to break above this area before I look for the market to make it to this area, if I get that break above, most likely, since I waited for that to happen, the market is going to continue to this area, because I'm waiting for the market to show me what it wants to do, and I'm building my bias off that. I'm being patient, and vice versa. If I just try to go ahead and buy here without the market showing me that it's broken with a strong close above, then it's not likely to go ahead and make this move to the upside. But since this move did make a move to the upside, did not get in, rules were not satisfied, and the market starts to pull back a little bit. Nothing too terrible, and now we start to see that the market is breaking above the structure area with some momentum, and we are starting to see the market change as well. Market structure is changing as well. We are starting to see higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. What do we expect? A higher low before we see the market make a higher high on its way up for the daily retracement. So this isn't an overall reversal. Remember, our multi-time frame analysis, this isn't an overall reversal, but we're just looking for the daily retracement to go ahead and complete itself. So now that we're starting to get the break and close above, we did not enter in on this candle yet, because the rules weren't satisfied either. We waited for the market to make a strong move above the area, and then right about here is where the signal was sent out. So as you can see, little candles right there, our little candles are making move right there. Now we know where our target is going to be. So now that we have the break above, we know that we're going to enter in on previous structure resistance, now turn support. So it was structure resistance over here. We want to enter in on structure support, what would act as structure support right here, because 9 times out of 10, if the market wants to continue doing what we think it's going to do, then our entry will not be tested, because we are at a prime area. We're at previous structure. We're at really strong structure. So once we get our test and all the orders get filled in this area, normally you don't see that area retested once again. So now that we have our entry at previous structure resistance, that should act as support. We know our target is going to be up in here. We have previous structure support that should act as resistance, and that's even on the hourly time frame. So if we do get a little more accurate right in this area, we have all this area that was support broken to the downside, and we want to see it act as resistance over here. So it is a magnet to the market, attracting to that area. And then we have our stop loss down here, protected amongst the lows. We're below structure, so we have our stop loss protected, and then as well we have a favorable risk to reward. So we have a 2 or greater risk to reward, looking for about 45 pips on this day trade. I'd say 8 o'clock at night, you go ahead and let it play out. As you can see, we get the perfect retest of the entry, and not only did it retest the entry perfectly, it came back and retested the overall structure of what we wanted to see the market break above before we felt confidence in all the confluences that we stacked up in order to get our bias to see this market move to the upside. So this was the area we needed to see the market break above, because it was holding the market below. It was acting as structure resistance, and then once we did get the break above this area, it came back and retested this area perfectly as structure support, and then from here we hope to see the market move to the upside to go ahead and hit our target that we've identified. So continuing forward, I just wanted to say that because I wanted to highlight that example. Previous structure resistance broken to the upside, now acting as support. So once it was up here, yet to be retested. Previous structure structure yet to be retested can expect to be respected. And this is on all time frames. So this is even on the hourly time frame. You could turn this strategy in from an hourly to the 5 minute if you're doing your multi-time frame analysis, maybe even the 1 minute. You could capitalize on this retracement, and then that puts you in a great position to go ahead and capitalize on the real move to the upside. Now this is on lower time frames, so it's not the real move to the upside, but if you're looking at it from a smaller time frame perspective, this would be the retracement and this would be the impulse, because we are making higher highs and higher lows. Higher highs and higher lows. So moving forward, moving right along, we start to get a little bit of drawdown. Market plays in this area just a little bit, and then from there the market explodes to the upside, hitting the take profit for a nice and easy 45 pip take profit day trade. So you're talking about getting in the trade at 8 o'clock, and then by 4 o'clock, so what is that, 12 is 4 plus another 4, 8, so 8 hours of trading. Go ahead and hit 2R take profit and 45 pips. Now let's just continue. That was just the signal. I wanted to go over the signal, but let's just continue going with the strategy just so you can get a better grasp of what the concept is and how we're trading it here. So this wasn't the structure support of the overall area. That area was down here, so the market came in this area and went to the opposite direction. We started here, made a move to the downside. From there, we went in the opposite direction, so we have structure at the bottom. And then from there, we also have the last time the market went in the opposite direction was off this bullish candle, and then it made a move to the downside. So the market was moving up, and then it went in the opposite direction to the downside here. So now we have our structure right up at the top and our structure at the bottom. And we're just going to do the same thing over and over and over. We'll move to the next one, and we'll say if the market breaks to the downside, we'll look for the retracement back up here, and then we'll be in a good position to capitalize on the impulse move to the downside, and then vice versa. If we break out to the upside, we'll look for the retracement back on lower time frames, capitalize on that, get in, and the move to the upside, we'll capitalize with the swing trade. Bada bing, bada boom. So let's play it forward. The market's just ranging. Okay, we can tighten it up. We can see that we are really playing in between this area here, so I thought we were gonna get the break below. All right, we're starting to get the break above. Now remember, we're breaking above this whole area. Oh yeah, we got it. Now we don't just start looking for the retracement, correct? We don't start looking for the move back to the downside. We need to wait for what? The big market players to go ahead and indicate that they are ready for the retracement as well. And how do we do that? We wait for a candle of a different color. So bada bing, bada boom. And now, where's our area? Our area is the most recent structure level broken. So we made this move up. We went in the opposite direction, went down, went in the opposite direction. The most recent structure broken is right here because we broke it to the upside. So we're looking for a move back down to this area, and then we'll be right in trend for a continuation to the upside if the market wants to go ahead and make that move. So now that we've gotten the one candle of a different color, we can drop down on lower time frames, and I can go ahead and tell you from the strategy rules that we would have our entry right around here, and then we want to get our stop protected. So we'll put it right up here above the structure, protected. So if the structure does break to the upside, we no longer want to be in this trade anyway, because it's not confirming our bias of lower lows and lower highs on its way down to this area. And then if we do identify that we have this area right in here that looks like prime real estate, because this is the overall area we want to see the market come into, and just being a little more exact on the hour time frame, we can see that this was previous structure resistance broken to the upside and was acted as previous structure support. So if we come back into this, this should be a magnet of an area, and then from there we can let the market do what the market wants to do. So all we are left to do, and you say, why is your entry there? Previous structure resistance now should act as, or previous structure support over here should act as resistance over here, just to go ahead and clarify. Make sure we're doing the same things all the time. Find the strategy, stop above high, targeting down here, nice and easy, over to our risk to reward, and then from there we let the market play out. So we get our entry triggered right there, market starts to play around and then makes a move to the downside. Take profit met for 49.3 pips overall. Got in about market change over to 12 o'clock the next day. So day trading, 24 hours, 48 hours to trade will be closed, man. That's all day trading means. But yeah, as you can see, previous structure yet to be retested can expect to be respected. Just basically put, we can look for the market to go ahead and retest previous structure broken. We had previous structure here, came back, retested it. We had previous structure here, came back, market came back, retested it on the daily time frame. We capitalized on lower time frames using structure and multi-time frame analysis. So previous structure yet to be retested can expect to be respected. Previous structure yet to be retested can expect to be retested. Previous structure yet to be retested can expect to be respected. Previous structure yet to be retested can expect to be respected. Previous structure yet to be retested can expect to be respected. 5 times fast for your jazz. What's up? But yeah, man, that's really it. A nice and easy, probably my favorite strategy to use. Say I haven't traded in a week, or I've been in a swing trade for a few days and I haven't traded, and I want to look for an opportunity for that day. I may pull out this day trading strategy. If you want to know the full rules and details to this strategy, on how I take this strategy and what we use to keep us out of unlikely trades or unfavorable trades or trades with low probabilities that won't play out in our favor, even using this same strategy and finding the good ones, go ahead and check out the link in the description. It'll also be the first pinned comment. But yeah, this is one of my favorite strategies that I use in the program. There are a few more if you would like to learn those as well. We do have a few strategies, a few day trading strategies and swing trading strategies as well. So check that out down there, man. Links in the description. Hope you gained some valuable education, trading education, and I hope you can take something away from this video and apply it to your own trading. But other than that, I hope you have a profitable day on and off the charts.